You are listening to the Your Next Season podcast, the show designed to keep you informed and uplifted through candid conversations with our guests and host, motivational speaker, and life coach, Gigi Hopkins. Be sure to like and subscribe. And now, here's your host, Coach G.
Hello, and welcome to Your Next Season podcast, The Reboot. My name is Gigi Hopkins, and you know how I say it. I'm super excited about today's show. And listen, I'm really excited about this one because I have somebody, listen, we go way back. I'm talking way back. But today, and listen, guys, we cut up something terrible, but we're not going to cut up today. We're going to be really, really serious today. Okay, we're going to cut up a little bit. Listen, I have a good friend here with me, and I told you when I rebooted the podcast, I want to bring stuff to the community that's going to be impactful, and I know that this piece today will definitely be so. So I have with me insurance broker, Raymond Cotman. Raymond, welcome to the Your Next Season podcast.
Well, thank you for the invitation. I appreciate it, and I'm excited to extend or to return the friendship because you've been on with me on Let's Talk Faith over the last few years, several times.
Several times, and I enjoyed it. Of course, we cut up, so I'm terrible again, but that's just what we do. We still manage to be impactful. But today, I want to really talk about life insurance, the need for it. I want to just really quash some of those myths about life insurance and people having this notion that they don't need it. I'm dead anyway. It don't matter to me. I won't know it. Yeah, but I will. Yep. If you leave me with your bill, I'm going to know about it. And so I really want to talk about it. And one of the reasons I invited Raymond onto the show is because last year, some of you may remember that my brother passed away June of last year, 2024, and my father passed away December 2024. And I had two scenarios, Raymond, and that's why I wanted to really reboot this podcast so that we can talk about stuff that the community needs to know about. So when my brother passed away, and this is a very transparent moment for me, you know, I'm known to be very transparent, and I want to be honest, my brother didn't have insurance. Now, when my father passed away, my father made sure he had insurance, and he made sure he told me he had a policy. I was the beneficiary. He made sure he told me how he wanted to go. He wanted the extra. He wanted no bells and whistles. Don't let them people try to get no more money from you than they need to. But he made sure he left something for his child to take care of and left me with no expenses. And so when my brother passed away, Raymond, GoFundMe was not an option for us. It just wasn't. So I had three siblings, and the three of us, including my oldest son, we agreed to pay for the entire expense of it. And what we agreed to do was just split it down the middle. And that's what we did. But everybody is not fortunate to do that. So here's what I want to talk about. Let's talk about that piece that you don't need life insurance. Do you really need life insurance?
Are you asking me? No.
It's sort of rhetorical.
Right.
But that's what goes on in some folk mind. It's obvious that that's what goes on because how many times have we seen GoFundMe accounts?
Right.
And listen, please don't come for me in the comments about that, because if you need help, you need help. But our goal here today is to help you be proactive so you won't have to be reactive.
And I would like to set a scenario, Gigi, with your family, if I can.
Sure.
You were talking about your brother not having life insurance. And so the three of you decided to split the bill, which is really good.
Including my son, Trey. He went equal with us as well.
Right. So with that, imagine what that would have been like if the three of you had decided not to, and I'm just going to use some numbers that I'm just pulling out of the sky.
Yes.
Let's just assume it was a $6,000 bill. And you all decided to put $2,000 together, and you pulled $2,000 out of your bank account to make it happen. Imagine if you had just said, I'm going to take out a $2,000 policy and pay pennies on the dollar. Should something happen, I'm going to be kicking in anyway. So it's not $2,000 out of my pocket. I'm only paying pennies on the dollar, and the company would pay the 2,000, that would make more financial sense. But that's an idea that I always talk about when I talk to families about leaving life insurance for your family. What does that really look like?
Mm-hmm.
Yeah, if you can afford it, do it. But if you can't, there are still other options available, like someone saying, I can take out a $2,000 policy for $20 a month, or I can
Mm-hmm.
take out a $4,000 policy or $5,000 policy for 30 or 40 or $50 a month.
Right.
It beats having to pull that out of your own bank account from your own family, because you may need it, and
Mm-hmm.
times might um, times can get hard for people, right? So
Right.
a lot
Right.
of times you go to your family for those things, but if they're not here and you've spent your money burying them, what do you have? So I just
Right.
want to put that out there early.
Right. So what I hear you saying, insurance broker Raymond Cotman, is that we need life insurance.
We need life insurance.
We need
Yeah.
to get life insurance. Listen, for the parents out there, you're supposed to leave something behind for your children. And let me tell you what that something is not: debt.
Right.
Because where we may say, well, it's not going to affect me because I'm going to be dead, but it's going to affect your children.
Right.
And it's going to change the dynamics of their household, because now this is expenses
Right.
that they didn't count on having to make. Now I'm going to flip that a little bit, because that two deaths last year was a huge eye opener for me. One not having insurance and the other one having it.
Right.
Maybe we as children, and you can help chime in on this, should look into getting policies. That way we don't have to worry about that. So what do you say about that? Is that an
I,
option?
I always encourage people to do that. I
Mhm.
tell every child I talk to, you need to consider, if your mother, your father, or your parents aren't here to help you financially, you could actually take out a life insurance policy on them. If they can't leave you the legacy of fortune, if they can't leave you the legacy of a home or land,
Mhm.
something you can sell and use financially to forward yourself forward financially, the best thing they can leave you is their life.
Right.
So
That's good.
if a parent allows you to take out a life insurance policy on them,
Hmm.
then do that to the level that you're comfortable. Meaning, if you only have $50 every month to do that, then find something worth $50. If you got
Hmm.
$100, then find something that's 100. But if you have whatever, then use that. But make sure it's something that you're comfortable with and doesn't put you in debt while you are alive. Something that is
Right.
comfortable. The reality is, for most people, not everyone, but for most people, we as children outlive our parents. So it
Hmm.
only makes sense. Mom and dad, my parents have life insurance. They've had it for a very long time. But even now, my father's like, he's 87. That would be way too expensive. I have even had this conversation with him. It's too expensive to get this at 80 years old. My mother
Right.
is in her 70s, so it makes sense. So I have a few policies on my mother. Should something happen to her, then they
Hmm.
have a policy for my mother. We'll pay for all of that. But then there is something that I have that I can turn in and say, you know what, I can put this in the bank, or I can do whatever I
Hmm.
want, or I can take that money and contribute to additional expenses to make that funeral or celebration even that much bigger or better, right?
Right.
But
Right.
that is an option, and is always an option. And I tell everyone, get it on yourself, and then allow your children, your loved ones, to get it on them. And here's the other reality, and I know we're not even talking about this, but as African Americans, most of us don't have legacy. Our
Mm.
parents, and
That's
even many
good.
of us don't
Hmm.
have legacy to leave, right?
Hmm.
We have houses, and for most people, they're refining that mortgage to pull money out so that they can live off of that. So honestly, the house isn't even there.
Yeah.
The children would have to pay it off. It
Yeah.
makes
Yeah.
sense to buy something and to take care to have a life insurance policy that will
Okay.
benefit you financially.
So let's talk about the different types of policies, because, I hear it all the time. Like, I follow this financial guru, and she's always, oh, you need a term, get a term versus whole life. What is it? What works for you, or what is the best? What's the difference in the policies, and who should get what type of policy? If you can elaborate on that for us.
Absolutely. So many things are running through my hair right now, but I'll be focused. So there are two types of insurance. There's permanent insurance and there is term insurance. So let's talk about term insurance.
Okay.
Term is over here. Term is like renting a home,
Mm-hmm.
right?
Okay.
You're there, you have a contract, you're there for a specific period of time. You may leave that place. You have no equity in that place. It is just a place to stay for now, for a specific period of time. Every so often, your rent might go up. Well, that kind of
Mm-hmm.
happens with term as well, depending on the type that you get. But then you also have this other one called permanent life insurance. That's over here. Permanent life insurance says, hey, this is like home ownership. I pay my mortgage, I get ownership. Cash value, equity, build up, the all of the values of that, it's going to cost a little bit more than it would term. Let's say in
Mm-hmm.
your rental property, right? The the refrigerator breaks. You call the owner,
Mm-hmm.
right?
Right.
Or
Right.
let's say the water goes awry. You
Mm-hmm.
call the owner who fixes it. It's not your responsibility. On home ownership or in your permanent policy, it is yours. It is
Mm-hmm.
your responsibility. You pay the premiums and it lasts for the rest of your life.
Okay.
So
So
who
term,
needs it?
so
Yes, go ahead.
term is for a set period of time.
Yes.
Okay. All right. So you mentioned permanent. Is that the same as whole life?
Permanent is the same as whole life. And the reason I use the word permanent is because there are different types of permanent insurance. Most
Okay.
people are familiar with whole life,
Mm-hmm.
and that is whole life. You pay it your whole life.
Your whole
Right?
life.
There are
Right. Okay.
nuances to it, but you pay it your whole life. But there is another permanent policy called universal life. And universal life is the best of both worlds.
Okay.
It is indeed, it functions as a term policy, but it has permanent um, effects of it as well. So it could last your whole life.
Mm-hmm.
So there are two types, and it depends on how you want to use universal policy. There's a way that I use universal policies that most people probably wouldn't agree with, but I look for policies with a no lapse guarantee. Can I tell you a little history, a little story?
Yes, absolutely. Absolutely.
So back in the late '80s, I worked for an insurance company called, well, I guess I shouldn't call that
You
name.
work for an insurance company.
I worked right? And that company at the time, with along with many insurance companies, were selling universal life policies. It was a
Mm-hmm.
new product and it bared an interest rate. So
Mm-hmm.
let's say you're putting premiums into your universal life policy and there was extra left over. That extra actually earned interest,
Mm-hmm.
and that interest went into your cash value.
Okay.
Well, back in the '80s, it made sense because interest rates were soaring. Like everyone was
Mm-hmm.
excited. Some of
Yeah.
those policies received as high as 17 to 18% interest in your life insurance policy. Get the heck out of here. Why wouldn't I do that? Right.
Right.
So
Exactly.
they said, well, here's what you can do. You can put a little bit of money in and let the interest pay the rest of your premium.
Mm.
Well, in around like 88, 89, the interest market tanked, and
Mm-hmm.
the rates dropped to like 2, 3%. And those
That's a
policies,
massive drop.
it was a massive drop, and a lot of those people
Mm-hmm.
were in a fix.
Mm-hmm.
They were like, wait a minute, I was told. Yeah, we know what you were told,
Yeah.
but that's not how it works.
Right.
Those
Right.
policies work differently from whole life.
Mm-hmm.
Whole life policies remained consistent while universal life policies had a little issue during that time. Since then, they've revamped universal life. So,
Mm-hmm.
but because of that scenario, they created what's called no lapse guarantee. So, even though it's a flexible premium,
Mm-hmm.
like most policies, your premium is $50 a month. You have to pay this. If you don't pay this, your policy is going to lapse. Well,
Mm.
those policies, they were flexible. So they say your minimum was, say, $10 a month, but
Mm-hmm.
you could pay 25. or you could not pay anything that month. Just depends on how much was in your cash value. But you're subject to lapse at any given moment.
Mm,
To avoid that, I only sell those policies to people who are not looking for like investment opportunities, and I should even say
mm-hmm.
investment opportunities, but not looking for that extra, but they want something that's more affordable. I only
Okay.
sell those policies with a no lapse guarantee. And you could
Okay.
say no lapse guarantee to age 90 or no lapse guarantee to age 100. So as long
Mm-hmm.
as you pay the minimum premium, this policy is going to last until that age. At that
Mm-hmm.
age, it's going to stop, right? Um, that's important because universal policies don't cost as much as whole life policies.
Uh-huh.
So for someone who is saying, well, I like the term policy because they're really affordable, but I know I'm going to live to at least 80 or 90, and I know the term isn't going to last that long.
Mm-hmm.
I need a permanent choice. Well, I offer
So
the
you kind of
permanent
get the
choice,
best of both
both
worlds, like
worlds.
you said. Yeah.
Exactly.
Yeah.
Exactly.
So who would you say should look into term versus
Yes.
whole life? And then who should get I'm sorry, permanent life?
Yes. So anyone who is young,
Mm-hmm.
when you're younger, you have more bills. You're just buying your home.
Mm-hmm.
You're growing a family, so you need the most life insurance when you're younger. As you get older, the home is probably paid for. You're more secure financially. You have more money in the bank, less debt, right?
Mm-hmm.
Less taxes owed. Perhaps you're in retirement, right? So then, term is not really for the elderly unless you have a lot of debt.
Right. And so what age, when you say get older, can we put a number to that? What are you thinking as far as number is
Yes,
concerned?
between 25, I'll go younger. I'll say from
Okay.
18
Uh-huh.
to like 55. Term is great.
Ooh, I'm
And
right
actually,
there.
in 54 is the sweet spot because for a lot of companies, you can't get a term policy more than 30 years. Once you reach a
Okay.
certain age, like 55, it's going to be 20 years or 25 is your max. And as you
Mm-hmm.
get older, it gets shorter. You can only get it for
Okay.
10 years. By the
Mm-hmm.
time you reach 70, depending on the company, some companies will allow it. They'll say, we'll give you a term for the next 10 years at age 75. That's very rare, right?
Mm-hmm.
But that means that policy is going to end at age 85. Let's assume you live
Right.
to 90, you are
Mm-hmm.
without insurance. What are you going to do?
Ooh.
So
So it makes you think. You really have to think this out and get a clear, which is why I wanted to do this because sometimes you don't get this full breakdown
right,
of what insurance is. And you get a lot of people that get insurances online where they don't have that person to really walk them through it. They're just kind of looking at stuff and signing up because the monthly premium
makes sense.
makes sense.
Yeah.
But
So,
then at 90 and 80 years old, when you don't have insurance, we can't make that make sense.
and here's the thing: when your term policy ends, the premium jumps like 100%.
Wow.
So you might go from paying like, let's say your annual premium is $600 for 20
Mm-hmm.
years, right? But in that 21st year, when the term ends, it jumps to like $15,000, like something
Wow.
ridiculous.
Yeah. Yeah.
They know you're not going to pay it, right? So
Right.
it
Right.
ends, and you have to go out and qualify at
Mm-hmm.
an older age for life insurance. The question is, can you qualify for it? Because not everyone
Ooh,
can.
because all of those pre-existings and
Yeah.
comorbidity type things. And that's one of the things I wanted to talk about as well. So we talked about 18 to 55 for term. So then 55 up for whole.
So here's what I tell people to do, and a lot of the policies I offer, I make sure that they understand it. I say get a lot of life insurance while you're young, so that when you turn an older age and that policy is about to lapse or end,
Mm-hmm.
you can convert a portion or all of that term into a permanent policy, which means you don't have to go out and qualify. Let's assume
Right.
someone has, in those last 20 years, was diagnosed with cancer or
Mm-hmm.
has major heart issues or diabetes or whatever, right? then you have to go out and find new life insurance based on those health issues, which is going to be rated.
Wow. Yeah.
That's expensive, right? Even if you can find a term policy, it's going to be really expensive. And I deal with it all the time. And that's
Mm-hmm.
one of the things I enjoy about life insurance is I like to meet a need. So if there is something out there, my story kind of goes a little deep, but
That's okay.
I appreciate helping people find that life insurance that they need for them. But
Mm-hmm.
one company won't do another company will. But
Right.
back to
Right.
the issue is find a policy, a term policy that is convertible into a permanent policy in the future. So my term ends at age 55. You bought a 20-year policy at 35, right? It ends at
Mm-hmm.
55. Now you have no life insurance. Oh, I have this option to convert it. And I don't have to qualify? No, you don't have to qualify at all, ma'am or sir. Great, sign me up for that. Well,
Right.
you
Right.
want this whole $500,000 in a permanent policy? That's going to be really expensive. No,
Mm-hmm.
Raymond, I only want a portion. Oh, great.
Right.
How much you want? 50 to 75,000 or 100, right?
Mm-hmm.
We can
Mm-hmm.
convert a portion of that policy into a permanent policy that you will keep for the rest of your life.
Mm-hmm.
That makes good financial sense.
Yeah.
And I'll go here as well. And if I'm and please ask me any questions if you
Okay.
don't understand. I believe in a hybrid as well. So
Okay.
for someone who has, let's say, someone who is doing very well for themselves, and they're like, the term really makes sense for me, but I know that I want permanent life insurance.
Mm-hmm.
Then let's get you a hybrid policy where we can get you a whole life policy for 50,000 with a term rider on it for $250,000.
Okay. Because that was going to be my question. Can someone get both?
Yes,
And so
absolutely,
that hybrid will kind of answer that question,
absolutely.
which to me makes a lot of sense, especially for someone that's younger. Now, you mentioned cancer, if someone has cancer, because I'm actually on a high risk drug, and getting a policy has been very, very hard for me down through the years because I've been on this high risk drug that is considered a cancer drug.
Okay,
Um, and so insurances really give me a fit about being on this medication because it's considered a high risk drug.
sure.
And it's hard. But what about that person that may have cancer or may have other illnesses? Are there policies now in effect that can benefit a person that's going through some type of illness or some type of sickness?
Absolutely. So every company, so one of the things that has changed, I was in the insurance industry for a long period of time, and then I went into ministry, right? And I'm coming
Mm-hmm.
out of it. But early on, there is a traditional policy, and then there is a simplified policy. A traditional policy says, you know what, this is traditional, and our tradition is we're going to order your medical record. We're
Mm-hmm.
going to require blood and urine, and we're going to send a nurse
Yep.
to your home, or you're going to have to go somewhere and do all of these things. And people are like,
Mm-hmm.
I don't want to have to do all of that. And I'm busy and I'm working. I got a family. I don't want to. So they created what's called simplified issue, right? So simplified issue, some of those policies, actually, I have a company right now. We could do an application. And while you're on the phone, they will tell you whether it's accepted or denied
Oh
right
wow.
there online, right?
Right.
They're not gonna wait for wait for information from your doctor. They're gonna go right
Mm-hmm.
out to the medical insurance bureau, which is what all insurance companies do. They go to the medical insurance. They call it the MIB report. It
Mm-hmm.
is not your detailed information. It is like coded or encrypted information. They can see, oh, this code right here says something serious with cancer, something serious with blood disease or anemia or whatever the case is, right? They look at all of that and they make an assessment. We're going to factor that into the price, right?
Mm-hmm.
So while people are, look, I'm going to go into a rat hole, but those two, simplified and traditional generally will cost you less, but it requires more of you. If you want to
Okay.
go through that, then I encourage you to do so, right? because it's going to in the end it's going to cost you less. But
Hmm.
if you have a sickness, most companies will rate you. They will say
Yeah.
you get a preferred plus, a preferred, a standard, smoker non-smoking rate, or we'll give you a standard non-smoking table A, table B, table
Hmm.
C, etc. on down. And each one of those tables is like 25% more, 50% more, 150, 250 as you go down that line, which means that's how much more it's costing you to be in that policy. So it is possible it's going to cost you more. And
Okay.
that deters people because they're like, I don't want to pay, $200
Right.
for a $2,000 policy. Like it
That's
doesn't make
right.
sense, right?
That's right. Yeah, it's been a challenge because of that high risk drug, and I feel like it serves as a deterrent, and we don't want to deter people from getting life insurance because it's so important and we need to make sure that they have it. Now, I've also heard people talk about living benefits. And if you're just tuning in, welcome to Your Next Season podcast. I'm your host, Gigi Hopkins. I have with me my guest, Raymond Cotman, who's an insurance broker, and we're talking about life insurance. And before we get into living benefits, Raymond, I want to say this. We're talking about life insurance because the two people on this screen probably grew up in a household that didn't talk about death
Right,
because it was a taboo thing to talk about, although it's going to happen. That
right.
never makes sense to me. But I will say this, I do remember, Raymond, when I was younger, and you've already talked about your parents having a policy forever. That was a big thing. My grandmother made sure if she didn't pay anything else, she paid that insurance policy. And now I don't see the urgency that is to get life insurance, but we need it. And so we have been talking about things, and we're going to have Raymond's information on the screen so you guys can call him. He'll be more than willing to answer any questions. And of course, he'd be more than willing to sign you up on a policy because what you signed me up on one, was it 2017, 2018? I got
Yeah.
one for my son. We still have it. Listen, and I want to talk about that because my son was young. He was much younger. He was driving. He was living life.
Right.
Put some insurance on your young folk, and especially in this day and time where young folk are doing all kinds of stuff, you need to have insurance on these people. Okay. So let's stop playing and let's be proactive so we won't have to be reactive. So,
Right.
again, I'm talking to Raymond Cotman, who's an insurance broker waiting to meet your needs. So, let's talk about living benefits. Talk about that a little bit for us.
Um, so I do want to put and I will. I want to mention guaranteed issue life insurance policies
Okay.
as we talk about sicknesses and people who qualify, who don't qualify. What does that look like? Guaranteed
Mm-hmm.
issue policies. People have probably heard guaranteed acceptance. You cannot be turned down. We
Mm-hmm.
can talk about those policies in a minute. Let's talk about living benefits.
Yes. That
So
$10,000 policy guaranteed.
yeah, and what does that really look like? So living benefits. When I was in insurance back in 2010, I didn't hear. No one was talking about living benefits. When I
Mm-hmm.
came back in 2019, I was hearing all the talk about living benefits. I'm like, oh, that's just extra stuff, but it makes so much sense. Let me tell you, not from a sales standpoint,
Right.
it makes sense in life. Why? So a living benefit is most people and most life insurance up to a prior to the last 20 years was about death,
Mm-hmm.
meaning nothing is paid out until someone dies. But
Mm-hmm.
living benefit says if you live, you can tap into your death benefits while you are alive. Let me say that again for those who think you may have misheard me. You can tap into the proceeds of your death benefit while you are
Tap
alive.
in. Tap in.
Yeah, go ahead
Mm.
and in the
Tap in.
comments, just say tap in.
Tap in.
Yes. So what does that look like? So I
Yeah.
have one company who offers a term policy with an 80% living benefit. So
Mm-hmm.
let's just
Wow.
assume you have let's have a little fun with it, Gigi. Let's assume you have $1 million policy. What? You know you can get that pretty easily in a term policy, and it's not as expensive as you think it is.
Yeah. Mm-hmm.
But you can get that,
Okay.
right? And I sold a policy to someone who was in their 40s for like $1 million, literally, for like 160, $170 a month.
Mm-hmm.
But look at what you're getting on the back end, right?
Right.
But let's
Right.
assume your policy was $1 million
Mm-hmm.
and you were diagnosed with heart attack, cancer, or stroke.
Okay.
As long as you can prove that by a physician and send that
Mm-hmm.
into the company, they would
Mm-hmm.
allow you to tap into 80, like 80% of your death benefit.
Wow.
So now you're looking at $800,000 coming to you while you're
Mm-hmm.
alive to have the surgery you need so that you can fully recover, or to
Mm-hmm.
pay for the medications that are $4,000 a month, right?
Right.
Or to make the adjustments to your home, like
Mm-hmm.
a ramp, or moving to a home that has no steps in it, no stairwell, right?
Mm-hmm.
You can now do that. You can do that because you have this money available. The company doesn't care how you spend that money.
Right.
They say if you have the need, then we will make it available to you and you can do whatever you want with that money. Whether it's go into a nursing home and pay the medical bills, which is what most people are thinking.
And here's what a lot of people don't realize. People been doing this. There's been a lot of people monopolizing this situation right here, this living benefit, and people wonder how they're doing this and how they're getting that, because they thought about it. They thought in a smart way to get this, because you can get money out of it, and it makes all the difference in the world when someone has cancer, or because when, and a lot of people don't want to talk about this type stuff because, again, we grew up in households, it was taboo to talk about death. Don't talk about that. Well, we're going to die. We need to talk about it. Right.
Yep.
And so perhaps if maybe, just maybe, people had been talking about it, they would have been prepared.
Right.
Because what happens when you get an illness, I mean, it's happened to me. When I had an illness, I had to leave nursing for quite some time until I could bounce back and get back into nursing. And that's what happens when people have cancer and when they have heart disease and your body goes through a lot. Your
Right.
job is affected by it. Now,
And
you
some
have some jobs that's going to be real nice for a certain period of time, but niceness runs out when I need a body in the building and your body can't be in this building.
right.
And so
Listen.
then you run into that risk of either not receiving nowhere near the money you were making or none at all. So
Wow.
this type thing would be really good. So Ray, let's do this. Let's talk dollars.
Mhm.
What's a ballpark figures on some rate? Because I think folk think insurance has to be an astronomical amount.
Right.
Listen, I know people that drink. Now, don't come for me, Starbuckians. Don't come for me, because I'll come back for you. Okay.
Right.
Because I love a good Starbucks too. But I'm not about to pay $12 every day for a cup of coffee
Right.
and don't have life insurance.
Right.
I'm gonna go ahead and drop my pen on that and let you go ahead. Let's talk some rates, because sometimes I think if you, I joke about that, but let's think about that. You're investing money. You got the little blue truck dropping off packages at your house every day. You're in the line at Starbucks waiting for I don't know how long, and you're in the line for the next new Stanley Cup, paying $40 for a tumbler. I'm just gonna call out stuff. That's money that can be allocated towards something that's really needed,
Right.
which is
Right.
life insurance.
Right.
So,
So it does vary from person to
mhm,
person and based on your age and your health and all of it. So I really
right.
can't get into rates, but let me say this. Um, I had someone come to me years ago and say, look, I am on a very, very tight budget
Mm-hmm.
and I need life insurance.
Mm-hmm.
And this is one of the cases that actually it warmed my heart to be able to meet the need. But the person was
Mm-hmm.
like, I only have like $20 a month. And I'm like, okay, let me see what I can do.
Mm-hmm.
I was able to find a policy for $5,000. It's a permanent policy. It will last for the rest of their life, right?
Mm-hmm.
But $20 a month, right? If And I would say to you this, if you're on a tight budget and you need something, then let your agent know and
Correct.
talk about the options that are available. I like to do that, right?
Yeah.
Because
Yeah.
it is not always about the money.
Hmm.
Everyone wants to make money. No one wants to be broke or whatever the case is. So
Right.
set that aside.
Hmm.
You want someone who has your best interest at heart, who
Yeah.
knows what you're needing, right?
Hmm.
I was able to meet that need. And a few years later, that person came back and was like, look, I need another policy like that. I was like,
Hmm.
yep, it's going to cost a few dollars more, literally a few dollars more,
Hmm.
because they were still on a limited income and they wanted to leave something
Right.
for their children,
Yeah. Yeah.
right? Made all the sense in the world. So it
Hmm.
depends on your budget, on what you
Right.
can afford.
Hmm.
But I would definitely say if you're on a tight budget and you know that what we're getting is not enough, you really should consider having conversations with your family. And I would be
Yeah.
willing to actually be in that meeting with my clients to
Hmm.
say, look, let's meet with your family. Let's talk about what you're doing and let's talk
Right.
about the need because right
Hmm.
now it is about $10,000 to bury someone.
It is. It is. And and one of the things I wanted to touch on, people also, and this is gonna not sit well, and I'm okay with that. I'll embrace your comments. Listen, everybody can't go away in a casket. Some people you just need to save the urn.
Yeah. Yep. Absolutely.
And when you said that $5,000, that's what made me think of that because people are like, you can't burn anybody for $5,000. You can actually cremate somebody for that.
Yeah.
Because
And
listen,
yeah,
all
and
this
even if
new
something
stuff
is right,
is
even if
not
something is left
necessary.
over, it's a smaller bill. It's a much
Right.
smaller bill. Yeah.
Hmm.
Absolutely.
And so I think we get in our head that we need to go out a certain way. I've already told my children, and I do have policies, in fact, don't even waste the money. Put me beside my dad in the urn that I already have. Just put me right beside him because you do not have to this all this new added stuff. And listen, I'm not saying anything against you all who choose to have a funeral. Knock yourself out, go ahead. Hope you enjoy it. I'm not saying that. But I am saying be realistic and make sure you stay within your means. You don't want to go broke or putting all your money on the back end when you can start pouring in some now. So get a policy. If that's what, if you know that you don't want to be cremated, then get a policy so that your family can bury you the way you want to be buried. I had a patient one time, Ray. She was hilarious. She died. She was in her 90s when she died, but 20 years, maybe even 30 years prior to her death, she had already had everything written out.
Mhm.
When I say everything, I mean the dress. She still had the dress. It was in plastic when she died. I was with her lawyer, who was her power of attorney. He got that dress down. I said, "Wow, she must knew she was gonna stay in that dress because I can promise you, a dress from 20 years ago, I can't even get in it. But she was able to get in that dress. She had the meal she wanted. She even went. Now this part, she might needed to adjust some because she even had the singer. She had who she wanted to sing at her funeral and the specific songs. And I don't bless her whole heart. I don't think she counted on the voices changing down through the years. Um, but I was there at that funeral and they carried out every single thing exactly the way she wanted it done. And it was a huge funeral, but guess what? She paid for it.
Wow.
And it was done exactly the way she wanted it done. When my father died, I don't want all those. I don't need no bells and whistles. And I don't want no added expense on you. This is enough to take care of every expense.
Right.
And I'm so grateful and thankful for my father for doing that.
Right.
Because I'd already endured earlier that year one that I didn't count on having to do any payments for, you know what I mean?
Right.
And so and I didn't mind and it's taken care of. So I'm not even trying to act
Right.
like it's a problem, but you know what I mean.
Yep.
And
Absolutely.
so let's leave some stuff behind and let's have honest conversation. When you pass away, how do you want a funeral? Do you want to be cremated? What do you want? What have you prepared? There is nothing wrong with having that what have you prepared conversation.
Can we talk about African American culture?
We, let's talk about it.
Well, I'm
I'm
asking.
here for it.
In the African American culture, we have things that we do when someone dies, and some of those things, all of those things, cost money.
Hmm.
The limousine costs money.
Hmm.
All those family cars, they cost money.
They cost.
Traveling to a location, a church, costs money. When you really could have the funeral at the funeral home, if you're going to do that, like weigh out all of those things. But then there is a segment of people in the African American community who are like, and and you all know it's true, so it is what it is. That's my mama, that's my daddy, and I'm gonna put them away the best. I'm gonna spend all of my money on them because they were good. I know they were good, but how much money you putting up?
Yep.
Having elaborate repasts.
Hmm.
And we saw it a lot in COVID, where,
Yep.
and I remember going to a few funerals during COVID, but people were walking away with box lunches,
Hmm. Yep.
immediately after because of that. But the reality is, all of those things, they add up and they cost.
They
Now, if
do.
that's what you want, right, and that's what, then plan for that and let somebody know. But also teach
Hmm.
your family members how to have sober judgment in terms
Hmm.
of
Oh, I love
it's,
that.
it's only $25,000. It's only $20,000. It cannot buy the world, right? Burial, absolutely. And I would say leave something over for spending, because the
Hmm.
reality is there is life after that death, right?
Yeah.
You got to
Hmm.
settle estates,
Yep.
bills have got to be paid, things have got to be taken. Someone has to do all of that, that estate piece of it, going possibly even going to court or selling a home. That takes a lot of time, right? So save some money aside for those things because you never know what you're going to need to spend later, and not just putting everything in the ground. But
And
it's
you
not
never
just that.
know, and you never know, and I'm sorry for cutting over you, but you never know the debt that this individual will have, because that may have been a bill that they completely forgot about. When I was reconciling all of my father's accounts, that money that he had in any bank accounts, that was put on pause
Mhm.
because they wanted to make sure that he did not owe anything else.
Yes.
And so these are the honest conversations that we need to have.
Yes.
And I'm with you on that. Yes, there are people who are, no, she was good to me. I'm gonna make sure I put her up nice. You can put her up nice and put her in one of the same suits that's hanging in her closet. You do not. And let me, and I now funeral home people, don't y'all come for me. Your business, and you know this is the truth. They will upsell you until they cannot. And this is one of our finest caskets. I need one that just won't open up when I put her in the ground.
Yeah.
I don't need all that fancy stuff. But they listen, and that's the worst time to purchase anything is when you're emotional.
Yeah. Absolutely.
And we already know when we're planning funerals, we're emotional. Now, when we were in there with my brother, I came because I'm the voice of reason. We don't need all that.
Right.
Nope, we don't need that.
Sorry.
And they all just looked at me. What you think, Gigi? I don't think. We do not need all of that.
Right. Yeah. Absolutely.
And we had his funeral at the funeral home.
So since you're talking about funeral homes, I want to say this as well. Um, the policy that you have, the company that you're with is important as well. There are a
Mm-hmm.
lot of companies that no one knows the name of, right? But they give you a
Mm-hmm.
good rate, and that's great. Like they're all going to pay out for the most part. They might pay you slow, but they're eventually going to pay out.
Right.
But
Right.
that's another thing you have to consider.
Mm-hmm.
The company that you're with, what is their claims paying ability? How quick do they pay claims? And
Mm-hmm.
I had a joke a lot of me because he wants me to sell his products last month. He told me that they send checks out um, as quick as 2.883 2.83 days later. And I had already checked the company out. I was like, I know this dude is freaking lying to me.
Uh-huh.
This is the biggest lie because most companies, No one's going to do that. 2.83
Mm-hmm.
days.
Mm-hmm.
No, that's important because when you go to the funeral home and they want to know how you're going to pay for it, if you're not paying it out of a checking account and giving them a deposit, they want to know, is there a life insurance policy?
Yep.
When they know what that you do have a life insurance policy, they want to know how much.
Yep. And they
When they
contact them.
and when they know how much, they can
That's when
gouge you.
they roll it up.
Right. And so you need to be mindful. You need to
Yeah.
be mindful of the
That's
company.
a good point, Ray. That's a
Yeah.
very good point.
Yeah.
Mm-hmm.
So if your company's going to pay out in 3 days, and there are companies that do,
Mm-hmm.
when you see like a A-rated company, triple A-rated insurance
Mm-hmm.
company, it's because of their claims paying ability.
Yeah.
It's not
That's
because they
good.
do work really well. It's because they pay the claims out
Really
based
quick.
on a standard that gets a
Mm-hmm.
triple A plus rating.
Mm-hmm.
And that's important to know. Whoever you're signing up with, that is something you want to consider. And it actually came to the surface this year because one of my clients passed, and
Mm-hmm.
it took like 4 weeks, a month to get that check. And thank God the family had the money to be able to pay for it, but they were waiting on that money to come back to
Mm-hmm.
replenish their bank account because no one's really
Yeah.
sitting on that kind of money
Right.
in
Right.
reality. There are people
Mm-hmm.
who are, but most are not. And so the claims paying ability is equally as important as the premium and the
Mm-hmm.
amount and the how you're spending and how much you're spending. That is equally as important.
And you're tapping into some good stuff here because as culture, some cultures are guilty of this. As soon as you know that there is a policy and you know how much, you have already spent it before the check comes. But I need you all to understand what we're saying. There things are not That's not as cookie cutter as it seems. Oh, she got $100,000 on her mama's policy, but that's a waiting process. Even though my dad didn't have a whole lot, it was still a waiting process. They froze his bank accounts. The money went off the top to the funeral home. They got all that information. And you're right. When they start looking at the policy, they'll know how much of an option they can offer you. And so we have to be very mindful and very careful not to start spending and be wise in what you have that you are spending and not thinking, well, I know I'm going to get this back, so I'm going to go ahead and spend it. You may not get what you're thinking you're going to get back because if they owe money on anything, and
Right.
especially if they owe the government, they're getting their money.
Right.
They're getting their money because
Right.
once that death certificate hits and they run it, everything, they immediately Wells Fargo, I think, is who my dad was banking with. Yeah, it was Wells Fargo. As soon as that death certificate hit, they froze his account.
Yep. Absolutely.
They froze
Absolutely.
it immediately.
Yeah.
So if you do, and I will say this, my dad had a few expenses that I had to take care of where he was living. And so I knew to get it out of his bank account and I knew to get it out quick because I knew that freeze was coming.
Right.
And so be smart about that part as well. But again, we're talking about life insurance. We're talking about the need for it because there is a need for it. And no two policies, we've already talked about that. No two policies are the same. And it is going to depend on your dynamics.
Yeah.
My life insurance is going to be higher than someone else because of an autoimmune disorder. So I already know, and I'm on that high risk drug. But don't think that it's not possible to get a policy. I think people that have diabetes or have this or that, so I'm not going to be able to get an insurance policy. Is that true?
Actually, in particular for diabetes, that is not true. I actually
Mm-hmm.
I work with a company who will accept diabetic uh, clients,
Mm-hmm.
applicants, and can have some complications,
Mm-hmm.
neuropathy. I always have issues with
Neuropathy.
both of those,
Yes. I
right?
got
But
you. Nurse
if you
G got
have either one of those, you can still get a life insurance policy. That's considered a complication,
Mm-hmm.
but this company will accept that risk.
Right.
In some cases, depends on the company, could be some type of neurological disorder. They may depending upon the diagnosis, except someone I did a video a few years ago on this
Mm-hmm.
particular company that was relaxing some of their rules around health issues. And again, it's my number one company. I'm not going to call the name of it. It's my number one company that I sell
So
right
you just
now.
have to contact Raymond to get that number one company.
Yeah, absolutely. How about that? Do
How
that.
you like I slid that in there?
But you can get it. And
Yeah.
for those who cannot qualify for a traditional or an immediate payout policy. And when I say
Mm-hmm.
immediate payout, Gigi, I'm talking about if we issue the policy today and someone dies 60 days later, that policy is going to pay out. That's an immediate payout policy.
Mm-hmm.
A guaranteed issue policy will require you to wait 2 to 3 years before they will pay out the full benefit. So how does that work? Well, you apply for a guaranteed issue policy, meaning
Mm-hmm.
I don't want to answer any health questions, don't run my reports, don't nothing. Just take my money, right?
Mm-hmm. Mm-hmm.
We will guarantee you that policy, but if you die in the first 2 years, we're only going to return to your beneficiaries the premiums you've paid into the policy.
Mm-hmm.
So let's say you take out a policy and the policy requires the first year's premiums are $1,000 and death happens in
Mm-hmm.
the first year. They're only going to pay $1,000 even though it's a $10,000 policy, right? Because
Okay.
that's the premiums paid. Oh, I forgot, plus 10%. So they're really going to pay you $1,100,
Okay.
right? In year two, you paid another $1,000 and death occurs, they're going to pay $2,000 plus 10%,
Mm-hmm.
$2,200. Let's say in the 25th month of the policy, going into the third year, death occurs, they're going to pay the full $10,000 out, right? But the reason people like those policies is because number one, they can't find a policy or qualify for a policy
Yeah.
outside of that. Number one.
Mm-hmm.
Number two, they don't want to answer any health questions. They're like, no, you know,
You don't need to
I
know
just
this.
don't want to do it. Right. You don't
Yeah.
need to know
Yeah.
this.
Mm-hmm.
Great. You're going to pay out the nose, but here's the policy. They're going to
Yeah.
issue that policy in about 2 or 3 days. A lot of them now will do electronic versions of your policy and send it to
Mm-hmm. Right.
your email. But that's a way to get a policy as well, especially when you're dealing with someone who is older, having a lot of health issues, hard to qualify, and they're tired of applying. Then that's a way
Mm-hmm.
to go about it. Um, Younger ages for guarantee issue policies, it is expensive. And I would
Mm-hmm.
say to anyone who's looking at that to look at an accidental death policy.
So just wrote on here to ask you what's your take on accidental life insurance policy?
Yes.
Because I actually have one.
Mhm.
Um, in addition to my life insurance, I have that one as well because yeah.
So here's the deal. The number one reason cause of death for ages 18 to 54 is accidental death.
Accidental. Yeah, I got mine because I rode motorcycles.
Yeah, and they're cheap.
Yeah.
They're so dirt cheap. You can get a
Mhm.
$250,000 policy for like maybe 20, $30,
Yeah.
maybe.
Mhm.
Actually, I did one for someone a few years ago in their late 40s for like
Mhm.
it was $500,000 policy for like $50 a month.
Mhm.
That's pretty decent.
That's
Like
pretty decent.
you can't find a term policy with that, right?
Mhm.
But that was available, in an accidental death policy. And depending on the state that you're in, I do sell in a few other states as well. Virginia does not offer that, which is where I reside. But other states will say, actually, yeah. Virginia
Mhm.
doesn't allow it, but if you're in states, I want to say North Carolina is one of those states where if you die in that kind of policy, I apologize for that. Um, they will pay, and you die of natural causes, they
Mhm.
will pay your beneficiary your premiums paid from that accidental death policy, which is nice. That's a little extra. It may not be a
Right.
lot, but that comes back. So it depends on the state that you're in and the type of policy that you're getting. Um,
Okay. So I think when most people think life insurance, they think older persons. What's your take on kids insuring your children?
Well, I have a company who will write a policy for your 1-year-old, 2-year-old for like $8 and some change.
Okay.
That's the premium for life, $25,000. So as long as the premium is paid for, can you find a policy for $8 and some change a month? It only makes sense,
Yeah,
right?
yeah.
Imagine if you said, you know what, I want a $100,000 policy for my 1-year old, my newborn, or my
Hmm.
whatever, 5-year old. That policy premium is going to last to age 100.
Wow. Hmm.
So they're not having to worry about qualifying for life insurance ever again or having to worry about a high premium because they got it so young, the premium
Hmm.
was so low, it will be that for life. It doesn't change.
Right.
You should do that for your children. It only
Yeah.
makes financial sense, people.
Yeah.
And
Hmm.
what I do, Gigi, I talk to my clients about a 10-year pay policy. Now that's a whole life policy. And the way that it works is you pay a higher premium for 10
Hmm.
years. After 10 years, you make no more premium payments for life. So
Wow.
imagine your newborn is just born, your child is just born. You
That's a
take out a
no-brainer.
That's a no-brainer for
It's a
50 or 60 bucks a
no-brainer.
month. You pay
Yeah.
that for 10 years.
Hmm.
And then that 25 or whatever their $50,000 policy will last for the rest of their life. It's a gift that you can buy for your grandchildren. It is a
It's a
gift,
great investment.
right?
Financial literacy is a thing.
Yeah,
It is a thing. And I didn't grow up in a home that finances were talked about, investing and smart investing. To me, this, what you just talked about, that's called smart investing.
yeah, absolutely.
And we need to do more of that. I think we covered everything except for this. How can someone contact you? I'm going to make sure we keep it on the screen. But because I think it's important that we get people insured.
Absolutely. And I,
And
I
it doesn't have to cost a whole lot. And listen, here's the thing I want to add to that. You don't know unless you try.
right.
And Raymond just talked about how he is big into helping people. It also sounds like you're big into educating them. And excuse me, because I have so many alarms going off, and that one was not supposed to go off because I thought I silenced it. So sorry about that. Hey, listen, it's life, it's a live interview. That's what we do. But you won't know what you qualify for. It's just like buying a home. It's just like buying a car. You don't know what you qualify. There is this guy on a commercial, and it made me think about it because you said something. He is on this car commercial. He said, "Don't tell me what you can't do. Tell me what you can do."
And do.
I never thought I'd quote that guy ever in life, but it makes sense. It fits here. It slides right in here. And you just talked about you try to educate people, you give them options. And I know firsthand because I got a policy from you. So I know firsthand that you are going to look for the best policies. I 100% trust you and your judgment. So what I'm saying is, guys, make the call,
Yeah.
look into it. You need to insure your children, and you need to insure yourself, and you need to insure your parents. Especially if, and listen, don't be afraid to ask, because I asked my dad, "Do you have a policy?" He goes, "Oh, yeah, I thought I told you that already. I have a policy. You're the beneficiary, and this is what I want." It's okay to ask them if they have a policy. You know, some people get into this thing, "What, you trying to kill me off? You trying to make money off my death?" No, I'm just trying to make sure I don't go broke, burn you.
Right. Right. Absolutely.
So
Yeah.
how can, go ahead, I'm sorry.
And the other piece is, and we didn't talk about it. We talked about it a little bit, but not in depth. Legacy. It is
Yes.
legacy. So yes,
Yes.
if you have nothing to leave me but your life, wouldn't that make sense? Especially if I'm paying the premium, it would only make sense to do something like that. Don't you want to see me not struggle? Don't
Mhm.
Aren't you on my side? Don't you want to see me move forward in life without some of the struggles, the financial
That's
issues?
right.
It
That's right.
only makes sense, people. And we have to think like that because the government's not going to give you anything.
Nothing.
And whether you're black, white, Indian, whoever, the government's not going to give you anything. It comes
Mhm.
with a price.
That's
I'm
right.
saying, and what we also didn't talk about is that the death benefit you receive out of a life insurance policy is tax free.
Mm-hmm.
So let's say
Yep.
that $800,000 came to you out of your life
Mm-hmm.
insurance policy, or even that $1 million came, you don't have to pay taxes on that. Yep, that's
Mm-hmm.
your money. It goes into your account, and
Right.
you can do what you want to do with that money. How you can invest it and make it taxable, totally up to you. You
Mm-hmm.
can make money with that money, right? But it is tax free. And that's a benefit. That's why people use life insurance as a bank.
That was the last thing I wanted to ask you. When you hear people say, make it become your own bank, what does that even mean in layman's terms?
So the way that it works is not every policy is set up for it. You have to
Mm-hmm.
be in a what's called participating policy. And
Okay.
that's important because if anyone's putting you in a policy where you're wanting to set up something that looks like your own banking system, it
Mm-hmm.
has to be a participating policy. But as long as you're in a policy like that, you overfund it. So most people, and we don't know it because we don't really look and we don't really read it, but the premiums you pay in a whole life policy term is not even included in this conversation.
Mm-hmm.
This only
Okay.
this only affects permanent policies. But
Okay.
the premiums you pay is generally the minimum premium,
Mm-hmm.
which means you can put more in your policy. So there is a calculation. They call it a MEC, modified endowment contract. There is a limit to what you can put in, but if
Mm-hmm.
it's structured right, you can put a lot of money in your policy. And that's what the wealthy know. So imagine
Yes.
someone who has, say, $1 million that they want to fund into a life insurance policy. They say, you know what, over the next 10 years, I want to dump $100,000 into this life insurance policy. And then after that, I want it to just ride.
Mm-hmm.
And so we set it up. There's a way to structure it, but let's assume it's structured properly. That money sits there. Um, in a participating policy, you receive dividends.
Mm-hmm.
In index universal life policies, that money is receiving credited interest and accredited interest rates based on certain investment funds like the S&P
Mm-hmm.
500, et cetera. You're not invested in those funds, but the company is investing and they share a portion of their profits with you in that policy. The more money that's sitting in your cash value is what dividends are paid on. So if you only have $10 in your cash value, then the amount of the dividend they're going to pay you is going to be really tiny.
Right.
If you just started that policy, but you dumped in an extra $100,000 because of the way it's structured, your dividend is going to be based on that money sitting, that 100,000 sitting in your
Mm-hmm.
cash value. That's how dividends are paid out. It's not paid out because you've been with the company so long. It's paid out based on the money or the cash value, that the amount of money that's sitting in your cash value. So the longer it sits, the more that pot grows,
Right.
so
Right.
that you can say at some point, I've put in $1 million in this policy, but my cash value has grown to 2.5 million. Wow.
Wow.
I want to start a new company that's going to cost me $250,000 to start up.
Mm-hmm.
Instead of going to the bank, you can go to your life insurance policy, make a withdrawal that is tax free because it's your money. It's a part of your death benefit. You're getting it early. You use that money to start up that company and ultimately pay that money back to your life insurance policy. Or you can say, you know what, I put that money in and now I'm retired and now I've got $3 million in cash value. So over the next 15 years, I'm going to take $200,000, or probably something smaller. Let's say
Mm-hmm.
$125,000 out of my cash value to live off every year, and not worry about paying it back to the life insurance policy because the death benefit is still accumulating dividends based on the money in your cash value.
You know what I call that? The best kept secret of the wealthy.
Right. Yes.
The
That's
best
how it.
kept secret because it's been happening, it's been going on. But us certain group of us just never took the time to learn about it.
Right. And so when you hear people talking about, whole life policies, it's a ripoff. I get it, because for the average person, they're really only paying the minimum premium. So I
Mm-hmm.
kind of understand that to put an extra $100 in, it's not going to do what you really want it to do. So
Right,
keep that
right.
money in your pocket and go to McDonald's, because they'll take it. Right. Um, do the minimum premium. But if it's
I'm
something, if
done.
you're like, you know what, I have
Yeah.
this extra money available,
Mm-hmm.
I want to put it in this policy. It makes sense for someone who has it. Everyone doesn't have it. Everyone wants to do it, but you can't afford it. And that's the
Yeah.
reality. And we know
Yeah.
that. I
Yeah.
know that as an agent, when I ask you your financial outlook and
Mm-hmm.
what does that layout look like?
Yeah. Yeah.
I'm going to be responsible. I have a fiduciary responsibility to you to say, this
Right.
doesn't make sense for you, because you're only going to be able
Mm-hmm.
to do this for the next 2 years.
Yeah.
This has to have longevity, right? But if you're interested in any of that conversation, or if you're just interested in a final expense policy just to take care of yourself or to take care of your loved one, you can definitely reach me at 804-687-6670. Now, I get a lot of spam calls.
So
So
leave a message like you would have to do me.
yes, leave a message, or you can text me, because it's a cell phone. You can text
Mm-hmm.
me. My name is so and so. I'm looking to purchase life insurance.
Mm-hmm.
Can you call me?
And I want to even go as far as to say this, even if right now you're not sure, it's worth a conversation with Raymond because he's the expert, which is why I have him on the show. Because I want people who can impact the community in a positive way and to bring awareness to a much needed situation. It's time out for this taboo that we can't talk about death. We're all going to die.
Right.
So we need to talk about it.
Yep.
So, it's the stuff that we've grown up on and honestly put us in a blind spot and made us financially illiterate because honestly, this is
Right.
the best. This last piece that we just talked about, make it become your own bank, is literally one of the best kept secrets of the wealthy.
Yeah.
And guess what?
Absolutely.
We walk around in church all day saying it was stored up for us, but not if you don't have knowledge about it.
Right. Yeah.
Now, come for me in the comments. I'm ready.
And they talk about online how the Rockefeller family, this is what they do. They set
That's
up
what
a
they do.
trust. They have a life insurance policy.
Mm-hmm.
Whenever a child is born, they take out a large policy, $250,000 policy, whole life policy on that child. And it becomes a part of the trust. It becomes a part of how
Yep.
they forward their family.
Smart investing.
Yeah, it
Simply
makes sense.
put, smart investing. When you invest when they're that young, and then how you think a lot of people have these trust funds? It's really not because they were born into money. It's because someone thought about a smart investment.
Right. Absolutely.
So again, the number area code 804-687-6670. This is Raymond Cotman. He's an insurance broker. I wanted to bring him on the show. So again, you're tuned into Your Next Season podcast. I'm your host, Gigi Hopkins, and we have Raymond Cotman. Listen, guys, it's worth the conversation. You can text him because you may not get through if you call, but just text him, leave your number, and please answer.
Yes, absolutely. And
Please
you can
answer.
email me as well at raymondlifeinsurance@gmail.com. I try to make it simple. I've noticed other agents have started doing the same thing.
Mm-hmm.
Raymondlifeinsurance at
Okay.
gmail.com.
RaymondLifeInsurance@gmail.com. And again, all of this information is going to be put on the screen so that you can have it before we close out. You can take a snapshot of it, screenshot it. Listen, children, help your mom and them screenshot this, okay? So they can have this information when I
Yep.
post it on the screen. Raymond, I want to thank you so much for joining us on today. I always have a good time with you, but this was such a serious thing. And it meant a lot to me because I promised myself once I revamped this podcast, I was definitely going to have a segment on here about life insurance because of my own personal experience in 2024. So once again, thank you. This is Raymond Cotman. Once again, area code 804-687-6670. Or you can email him at Raymond, that's RAYMOND, lifeinsurance@gmail.com. All of it's going to get ready to appear on the screen shortly. Just get ready to screenshot it. Again, this is Gigi Hopkins. I also want to take time out to thank our sponsor, Dominion Health Education Center. And thank you all for tuning in to Your Next Season podcast. This is Gigi Hopkins, and until next time, be blessed.
Thank you for listening to the Your Next Season podcast, the show designed to keep you informed and uplifted through candid conversations with our guests and host, motivational speaker and life coach Gigi Hopkins. Again, thank you for listening, and don't forget to like and subscribe.